Uh, Hello, my name is Evan Buey, and I am the acting Senior Trade Development Officer for Japan Korea with Alberta Agriculture and Forestry. You may recognize me from such hit webinars as Planes, Trains, Trucks, and Ships, Oh My, COVID-19 Impacts on Logistics, and So You Think You Can Export, Exporting 101, Parts 1 and 2. So my role has changed since then, as I now focus on market development opportunities for Alberta companies in Japan and Korea. However, I still cover the export readiness file. So let's settle in as we tackle today's topic that affects so many exporters. So first off, I just want to give a quick snapshot of my team's programs and services and how we support Alberta agriculture companies. So my team specializes in supporting Alberta agriculture, food and beverage companies export to international markets. We help to facilitate export workshops and training sessions such as today's, and we generate market intelligence for companies. We subscribe to a couple of databases and can find you a wealth of information, market sizes, company shares, country sector reports, import-export stats, and so much more. We also monitor market access issues and help companies navigate free trade agreements. So as the world is slowly getting back to in-person events, and when they do take place, we will be there at all major agricultural trade shows. But if we can't attend in person, like many of you watching today, we'll be joining virtually or utilizing our in-market staff. So these in-market staff are located in our international offices in various locations within Asia, Southeast Asia, Europe, North America. A number of these offices have dedicated agriculture-specific staff within them who are experts of the local economy and are extremely valuable assets to Alberta industry. We also work closely with the federal government through the Trade Commissioner Service to tap into their expertise, networks, and buyer connections to help companies enter those markets. So that's us in a matter of minutes, but why should you even bother exporting? I think I can safely assume everyone watching is interested in or already exporting, but I'd just like to point out a few reasons why it can be such a good idea for your business. So as far as improving your business performance, exporting can help companies avoid any sort of growth stagnation. Exporters tend to be growth-oriented and experience greater growth than companies who don't export. Exporting companies are also more productive, and exporting a revenue base generates stronger cash flows, creating value and inspiring investor confidence. As far as decreasing overall risk, while entering new markets can certainly give rise to new and unfamiliar risks, exporting can actually help companies reduce risk by achieving a more balanced portfolio. Overexposure to a single marketplace, even our own of Canada, creates concentration risk, and exporting helps to eliminate that. The performance advantages that make exporters more competitive globally also make them more resilient to economic shocks that eliminate weaker players. Exporting increases both business survival and longevity. And lastly, exporting helps change the attitudes of Canadian companies. Because they are less sensitive to market volatility and less daunted by the possibility of business failure, they commit more resources to growth and invest more in innovation through R&D. All right, so that's my piece of the webinar. I'll now introduce our presenter, Christian Sivier with Solimpex. So following a 30-year career in international logistics in Europe and Canada, Christian started a Montreal-based import-export consultancy in 2010 called Solimpex, which is active in 2 areas: consulting and coaching to help SMEs grow internationally, and training on the logistics, customs, and regulatory aspects of international trade, importing, exporting, free trade agreements, supply chain management, and related issues. Christian lectures for CIFFA, the Canadian International Freight Forwarders Association in Toronto, and FIATA, the World Federation of Freight Forwarders in Zurich. He also gives seminars and webinars for various trade organizations and provides personalized training for importers and exporters. So with that, Christian, the floor is yours.
Thank you very much, Evan, and thank you for the introduction and for the invitation to speak to the group here today. I'm really happy to be with you and to know that we have a good number of attendees. So that means we're very dynamic in this post-COVID. We're almost there. We're almost getting out of this pandemic, and we know there's going to be this is going to create opportunities. It's going to be export growth, and that's very good news. We all look forward to getting back to a normal situation, of course. And so I'm very happy to be here with you today. We did a few sessions already last year and a few months ago on the general principles of exporting, the different pieces of the puzzle that we need to be familiar with when we start exporting. And today, thanks to Evan, we're doing something very different, very original that we have never done before. So we hope it's going to go well. We're going to look at the specifics of some export documentation, of the basic export documents, the basic documents we need to when we start exporting. So it's, of course, the topic itself is very wide ranging, and so we selected a few of the main pieces of the puzzle to look at with you in detail. And so ideally, of course, we should be together in a room where we could fill out these documents together. But we're not there yet, so we're still online. So it's not going to be as practical, but we still hope that you're going to get good information out of it and that you'll become more familiar with these documents. Now, I also wanted to say, before I begin, I wanted to say I looked at your comments, your remarks, your questions in the when you registered. You all or most of you mentioned some points that you were that were challenging, and that's great. It's very nice for us to have that. It's going to be hard to cover everybody's points because some are very specific to certain things. So the first thing I want to say is that we're going to cover export only. I know a couple of you had questions about the import process, the importing process, the B3 form. I don't think, I mean, if we have time at the end, I'd be happy to cover them a little bit, but I'm not so sure that we will have time for the import, to go over the Canadian import documentation. But anyway, if time allows, we'll try, but no guarantee that we'll be able to do it. So the way I've done this is, first of all, I just have a slide here on which I don't need to spend much time because Evan introduced me already, and thank you for that, Evan. All I want to add here is point to two publications that are at the bottom of the slide here, Supply Professional and Inside Logistics. They are Canadian publications that focus on supply chain management and logistics issues, particularly on international trade. So and both are free, so I highly recommend them to you. Look them up and subscribe to the newsletter and go on the website anytime. There's all kinds of valuable information there. I do publish articles in these two publications. That's why I'm quite familiar with them as well. So that is in order to look at these various the main documentation that we'll need to become familiar with when we export, Evan sent you a few of these forms. So we'll look at them one by one, and the way I've split this is I have quite a few slides to share with you to make you familiar with all these documents, and we'll stop and take a bit of time and hopefully we'll interact together for some specific ones. We won't be able to do that for all of them because that would take too long, but for specific ones I want to try to go over them with you a little bit, and perhaps then we can do a pause and answer questions if you have. So the way I've split my presentation, I have one part about exporting to the US. So there we're going to talk about mainly the what we used to call the NAFTA certificate of origin, which is now called the CUSMA certificate of origin, and we'll also talk about US customs forms a little bit to become familiar with them. And the second part will be focused on exporting overseas, exporting to the rest of the world, because when we export to the rest of the world, what is more challenging than exporting to the US is that we have export licenses, export permit requirements, which we don't have when we export to the US. And we also have obligations to do export declarations. Whereas for the US, we don't have that obligation. And but before getting into the first part will be US, the second part will be overseas. Before getting into the first part, I want to talk briefly about some common things that are common to exporting to the US and exporting elsewhere. And so the first one, as I mentioned a moment ago, that I have here on this slide is about export declarations. So don't worry, we'll get to that in the second part of today's presentation. And I just wanted to share this with you from the beginning, especially for those of you who are new to the exporting process. And I think I saw from the survey or from your comments that Evan has shared with me, I saw that quite a few of you are new to the export world, to the world of exporting. So the first thing I wanted to share with you on this is that basically, as an exporter, when we export products out of Canada, we have obligations to file export declarations with the federal government, with the Canada Border Services Agency. And the good news is that we have an exemption when we export to the US. So when we export to the US, we don't need to file an export declaration. It's also called a B13 for your information. And you have the form with you. It's the one that says export declaration B13. And we will look at it in the second part of today's session. First document I want to talk about when we are exporting, then we need to do a packing list for our shipment. I mean, it's pretty simple. It's pretty basic. There's no specific form really to use. As long as we have a list of what we're shipping and a list of packages, the packing list basically is going to have, yes, the same information that's going to be on the invoice, which we're going to talk about in a moment, except it will have no amount, it will have no values. Is just going to be on your packing list. It's just going to be a list of the items that you're sending, and as well as the which item is packaged in which box, and we'll need to have weights and dimensions, so weights and volumes, weights and sizes. And so a good packing list really will have all these details. And why is it important? Well, because we want to be able to, from our export side, we want to be able to have a good inventory of what we're shipping out, of course. So we check it off against a packing list, make sure that we ship the order complete. At the receiving end, it's the same thing. The receiver will check the goods and will check them off against a packing list to be sure he has received everything. It's also important to have a good packing list in case there's a claim, in case there's an insurance claim down the road because of something that got damaged or stolen or whatnot. If you have a good detailed packing list, it will help getting a claim through because the packing list will demonstrate what item was in what package, in which box, in which crate, in which pallet, etc., etc. It's also useful to have a good detailed packing list for customs inspection. Should customs decide to inspect your goods before letting them through the border or going to the US or before allowing them into a country from the port or the airport of destination, then if there's a detailed packing list, it'll be easier for customs to carry out their inspection because they can go straight to the item that they wish to inspect or they wish to verify. So that's about it for the packing list. As I said, no specific form or format, but it's important to have a good detailed packing list whenever we ship goods anywhere, whether we send them by air, by ocean, by truck, by courier. It's always important. If we send goods by courier, then we want to attach the packing list to the box, to the package. Now, the next document I want to deal with, then and that's valid for shipping to the US, exporting to the US, as well as exporting to any other overseas countries. The main document that's going to be helpful and that's going to be important for customs purposes is your invoice. So whenever you export goods, you always have to issue an invoice. You issue an invoice to the buyer And that's the document against which the buyer will issue a payment, right? So that's one thing. Of course, a commercial invoice, an invoice is an accounting document in that sense. But it's also something that's very important for customs purposes, because that's the first thing that customs anywhere will look at. They'll look at the invoice that covers a shipment and then figure out what are the goods, what is the value, what's the origin, etc., etc. And so what I want to share with you here is these two terms, these two technical terms. You may hear the term commercial invoice, you may hear the term pro forma invoice sometimes. And so what this refers to is the fact that, okay, when you sell goods and you're going to export them, then you're going to issue a commercial invoice. A commercial invoice basically is what we issue all the time, if not most of the time. And it implies that there's going to be a payment. And that's why we call it a commercial invoice. Now, sometimes when we ship goods overseas or to the US, there'll be circumstances where instead of issuing a commercial invoice, we'll issue a pro forma invoice. And they basically show the exact same information, but they have a slightly different purpose. And I want you to be familiar with this because so that you know when should you issue a pro forma invoice. And also, I want you to be familiar with this in case somebody asks you questions down the road and asks you why you did a commercial invoice and not a pro forma or vice versa. So a pro forma invoice is the same thing as a commercial invoice. It will have the same information, except that generally speaking, it does not involve a payment. So if you're sending free things that are sent free of charge, if you're going to send a piece of equipment for demonstration on a temporary basis and then bring it back after the demo, if you're going to a trade show and you're going to exhibit some goods that are going to come back to Canada afterwards, or you're sending samples or giveaways for free distribution at the trade show. I mean, I know that we haven't been to a trade show in about a year and a half, but we're certainly looking forward to a time, hopefully in the not too distant future, where we can go at a trade show again, because that's really the best opportunity to display your products and to meet prospective customers. And so going to a trade show or sending goods on a temporary basis, they're not sold, but customs wants a document. You see, that's the thing. The customs authorities want a document that they can check the goods against, and that a document that will show what it is that we're sending, what is it worth, where does it come from, and who is it going to, etc., etc. And so you always have, even if you're sending goods free of charge, samples, giveaways, you have to have a document. You have to have and then the document is the pro forma invoice. And you always have to show a value. You can't show zero value, for example, for giveaways. You still have to show a reasonable value that relates to the cost of the goods that you're sending. Sometimes it's also a pro forma invoice is issued to a customer ahead of time. So it's a draft of a commercial invoice, and the customer wants it in order to apply for an import license, for example, or in order to open a letter of credit, or in order to arrange payment. So there we send a pro forma invoice to the customer. The customer does what he needs to do, what he or she needs to do. And then when we ship the goods, then we issue a commercial invoice when the goods actually go out. And the last use of a pro forma invoice is, let's assume that you have a distribution center in the US, for example, where you want to ship your products ahead of time. Before having sold any of your products, you want to build a stock at a distribution center in the US, in Washington State, or Nevada, or whatever, or Montana. And from there, you will be making individual shipments to US customers, for example, once they have placed orders, et cetera, et cetera. And so when you do an exercise like this, if you're sending stock to yourself to a distribution center in the US, in Europe, wherever it is, then you won't issue a commercial invoice because the goods have not been sold yet. It's just a stock that you're moving into a distribution center. But customs want a document in order to clear the goods with, and that's where you're going to issue a pro forma invoice. So that's what I wanted to share with you to make you familiar with the terminology and the difference between the two. And so what information should be on a commercial invoice? Well, and I haven't sent you a form itself because there's no specific format for a commercial invoice. It's a free format. There's lots of examples you can find online, but there is nothing like an official format. Every company can create its own format for a commercial invoice. And so whether it's a pro forma or a commercial invoice, of course, we have to identify who is the seller and the buyer, or if the goods are not sold, who is the shipper, who is the consignee, who is the receiver. We want to have good descriptions of the products as well as good quantities, precise quantities of what's being shipped, unit price and total price, and of course the currency that is being used. The country of origin should always be mentioned on an invoice when we export goods overseas. The HS code should also be on the commercial invoice, ideally. Now, I hope that you're all familiar with the HS code. I think we did a session already where we touched on that. But for those of you who are not, the HS code is an international numbering system of products that customs around the world use to enter goods and to clear them, and to also to assess the duties and taxes that are payable. And so ideally it should be on the commercial invoice. If we want to show the Canadian HS code, then we should show the first 6 digits. If we want to show the HS code of the country of destination, for example, in the US, then we have to check what the HS code is in the US. HS codes are not the same in every country. It's only the first 6 digits that are the same, and the last 4 can vary from country to country. Now, 2 important elements that sometimes are not mentioned on a commercial invoice, it's the Incoterm, i.e. the terms of sale, i.e. who is responsible for delivering the shipment, and who is paying for the shipping cost, and who has the risks for the during transit. So it's important to show that under terms of sale, we should have the Incoterm should be mentioned on the documentation, and then the terms of payment also should be mentioned on the invoice, on the commercial invoice. Is it did you get paid in advance? So then you say it on the invoice. You say paid in advance in full, or are you getting paid 30 days after delivery, or are you getting paid via a letter of credit, a documentary credit, or is it cash against documents via a bank? So that should always be shown on the commercial invoice, the details of the terms of payment and the terms of sale. And so I want to show you here an example of a commercial invoice, and to stress the importance of showing the terms of payment. So that's a dummy commercial invoice that I created. It's not a real one. It's just to highlight what a commercial invoice kind of should look like. And so what I want to draw your attention to is the terms of payment. That's one thing, but what's very important is the terms of delivery, i.e. the Incoterm. So CIP Montreal Port, it means that the ocean freight on this shipment was paid by the Turkish company. And also that, so having an Incoterm enables everybody who is involved in the transaction to know what is included in the price and what is not included in the price. So we should always have that on a commercial invoice. Now, I saw a flash of a question that Evan brought up, but it sort of disappeared. So let me see if I can find it again. Yes, okay, I'm back in the chat. So if we ship, and I'll try to go to questions without spending too much time. If I see questions that you have, please don't hesitate to ask questions as we go along. I'll try to tackle them if it doesn't take too long. And if it seems to take too long, then I'll keep them for the end so that we don't delay the presentation, and so we have time to go through all the material. And so yes, indeed. So if you're shipping to Amazon, so you basically the question from Evan here, or via Evan, is if we ship to an Amazon distribution center because Amazon will be doing your fulfillment by Amazon, then yes, to go through customs, because the goods aren't sold yet, then you would issue a Pro-Forma invoice, indeed, and not a commercial invoice form. Exactly, right on. So that illustrates exactly So thank you for that, because that illustrates exactly what I wanted to demonstrate when I was explaining the various uses of a pro forma invoice versus a commercial invoice. So thank you, Lydia. Okay, so, but there is something wrong with this invoice, and I'm going to tell you what it is. If I can find my controls again. Yes. So what's wrong with this invoice is that ideally, if we ship goods and if we prepay the freight, so if the freight cost, if the shipping cost is for our account and is included in our price, as the exporter, actually for customs purposes, we should show the shipping cost separately. Why is that? Is because in Canada and in the US, when you do a customs declaration, you declare only the value of the goods. You deduct the cost of the freight and the insurance. So that's why it's a good habit, particularly if you export to the US, for example, is to show if you pay the freight, if the freight cost is paid by you, you should try to show it whenever possible or practical. You should try to show it separately on the commercial invoice, because the value declaration with US Customs has to be the value of the product itself, excluding the shipping and insurance costs. And so strictly speaking, if we don't do that, it could be a non-compliance from the US side. The way US Customs can be fussy sometimes. So if the freight is paid by the exporter, it should show, the amount should show separately on the invoice, preferably. Okay, so we're talking about exporting to the US. So here, what's interesting is that there's been a change as far as the certificate of origin is concerned. So what I have on the screen here, and which I did not send you, was the old NAFTA certificate of origin. I mean, I can send it to you if any of you are interested. And any of you who are interested, yes, please make notes. If later on you would like to have additional documents or links to sites where you could get further information or based on what we discussed here, I'll be happy to compile that and send that to Evan so that he can distribute it to everyone. So the NAFTA certificate of origin, the NAFTA free trade agreement, as you know, has been replaced by the CUSMA free trade agreement on July 1st last year, July 1st, 2020. So what has changed is this NAFTA certificate of origin. So it's no longer in effect. And so it has been replaced. Instead of having a specific form, we had a specific form that had a number here, CBP form 434. So that has been replaced by a so-called origin certification that basically has the same information, but it does not have a compulsory form. So it can be put on any document, including a commercial invoice, and that's what it looks like. So the rule for the CUSMA for shipping to the US under the CUSMA Free Trade Agreement, which the US called the USMCA Free Trade Agreement, the rule is that there no longer is a specific form, and there's now specific information that has to be shown on any document. So in theory, exporters could be adding this on their commercial invoice, adding these 11 data elements or these 10 data elements. And so basically we have to identify the importer, the exporter, the producer, the certifier. We have to identify the HS code and the origin criteria, and it has to be issued and signed by a legal representative, by somebody who is authorized by the company to do the certification. So what we have to be careful about here is that we should not issue an origin certification just so that goods goes through the border and and it's practical to do a document, sign it, send it, the goods goes through the border, good, we're good, we have nothing to worry about. We should remember that this is a legally binding document. So by issuing and signing that, we're saying that our goods comply with the rules of origin of the CUSMA Free Trade Agreement. And so we have to go through the exercise of making sure our goods comply with the rules of origin, and then we sign the document. And we also have to make sure we have good traceability of documents in our files in case customs down the road want to come and do an audit and ask us to prove that our goods met the rules of origin. So it's not something that we should take lightly, basically, is what I wanted to say. And so in theory, when the new free trade agreement was put in place, January 1st, 2020, we got rid of the form, and we all of a sudden have no specific form to fill out, but we have to fill out an origin certification with the same kind of information. And so what happened in practice, this is the theory, this is how negotiators did that, assuming or thinking that it was going to be simpler for companies. But in reality, what happened is that when goods started to flow through the border on July 1st, 2020, U.S. customs officers said, okay, where's the form? Where's the form? Where's the certificate of origin? And so what happened in practice, even though in theory we can do our origin certification on a commercial invoice, in practice, everybody use either a self-created form or an official form that can be made available through your customs broker or your freight broker or whatnot. And so this is one of the forms that I sent to you and that I wanted to you to have a look at, and also where I would be happy to answer any questions you may have. So if you look at this form, this is a 4-page document. If you didn't print it front and back, it's 4 pages. The main thing really is the first page, the front page. And so here, if you look at it, you'll see that it's actually the same as the old form. You identify the exporter, you identify the producer, the certifier, if it's different, and you identify the producer. You always have to identify with these free trade agreements, with the CUSMA free trade agreement with the US and Mexico, we have to identify the exporter as well as the producer. So if the producer is different from the exporter, then you have to show the producer's coordinates. The importer is the customer in the US, and then here you'll have, and so when you have to show tax ID numbers, if you look at the documents, your tax ID number, this is the same as an importer number, if you want. So, you know, in Canada, when we import goods, we need an importer number. And in the US, they use the IRS number, the tax ID number. And so that identifies, and so as an exporter, we don't have an IRS number, but our customer in the US will have an IRS number, and so he has to give it to us. So that's one option as far as the importer is concerned. Now, there are cases when we sell DDP in the US or FOB destination, then we become the importer of record. And I'll touch on that in a moment. And there, in that case, then we would have an RRS number or tax ID number. So then we would show it there. And then you show the number of the different parts or the different items that you're sending with a description. Very important, the HS tariff classification, that's the HS code. The origin, you will mention the country of origin. And then where it says blanket period on the right-hand side, this here basically is used if you issue the document once and then you use it for the next 12 months to cover the same goods going to the same customer. So what this enables you to do, instead of doing an origin certification for each and every shipment, you issue it once and then you refer to it, or the customs broker refers to it for each shipment that goes through. And so that's called a blanket certificate, and that's where you fill out this part here that says the blanket period, which is generally from January 1st to December 31st, right? Normally that's how people do it whenever it's practical. And then they issue a new one at the beginning of the following year. If you're not sending multiple shipments, if this is just a one-shot deal, then you don't say anything here. If you just do an origin certification for one specific shipment, and then at the bottom you identify the company, the certifier, etc., etc. Now I purposely sent you several pages, a document that has several pages because it has pages of explanations, and so you'll see on page 2, it has explanations on what is to be entered in which field. Field 1 is the certifier, and field 2 is the exporter, etc., etc. And then it describes also on this page, the second page, it describes what's called the origin criteria. Now, the origin criteria, what does that mean? That refers to the fact that either a product is 100% originating. For example, let's say you were growing blueberries or cranberries, and you harvest them and you can them or freeze them or whatnot, and then you export them, or peas or lentils, or anything that grows. Then it's obviously 100% Canadian and 100% it's 100% originating in North America because you grew it. Or let's say you're sending minerals that were mined in Alberta, so it's obviously 100% local. That's where you would say criteria A, wholly obtained. And then criteria B, C, or D refer to manufactured goods, where we say, okay, our manufactured goods comply with the rules of origin because either because we have enough percentage of local content, or we have a change in tariff code that's triggered by the manufacturing of a product. Now, those of you who followed I think we had a CUSMA webinar, we touched on that, on rules of origin. So based on the type of product that you have, and whether it is 100% local or whether it has foreign content, but you have enough percentage of local content, or you have transformed the product enough, that's where you'll choose origin criterion A, B, C, or D. And that's what you'll put in slot number 7 of the NAFTA certification of origin. And so that's what I wanted to show you. So I invite you to go through this, have a look at it, and see if you have questions about it, of course. And you can raise them now, or we can also raise them at the end. Maybe it will be more efficient if we raise them at the end. This way we'll be sure to go through all the material, but I'm fine with it if you have questions now. So don't hesitate, and then have a look at this document and let me know if it brings questions. So this is the main, when you export to the United States, the main document is your invoice. And then if your goods comply with the rules of origin of the free trade agreement, that's the main document, the origin certification. And that's valid for every type of goods. Now, I touched about a moment ago, I touched about the fact that in some cases we are a non-resident importer in the US. So that's when we sell DDP, delivered duty paid, or FOB destination. What that means is that we are the importer of record. This way, the US customer, and it's very common to do that. A normal way to do business is you are the exporter, you are the seller, and your customer is the buyer and is the importer. That would be the theoretical principle, right? You're the exporter, he or she is the importer. But when we sell to the US, many times it doesn't quite work like this. We are the exporter, and our customer does not want to be the importer. Our customer in the US does not want to deal with customs, and therefore we become a non-resident importer. We sell to them, everything done, all expenses paid, including duties and taxes. And so that's called being a non-resident importer. And it's very common to do that in the US. And that's why I wanted to share with you to show you what the US customs form looks like. So going back here, keep in mind that many times your US client will want you to take care of all customs formalities, arrange the broker, nominate the broker, pay duties and taxes, and look after the crossing of the border and pay all the expenses. So then that's called FOB destination, or DDP, delivered duty paid, depending on the terms of reference you use. And then you become a non-resident importer. And then, so when goods go through customs, then you have your commercial invoice, you have your origin certification, but everything will be done in your name as you being the importer in the United States. You'll be the importer of record in the United States. And so that is done, that is allowed, or that's possible because a U.S. customs broker then is appointed by you. You appoint a U.S. customs broker, and he represents you vis-a-vis U.S. authorities. So he does the work for you as if you were there, even though you're not there, even though you're not a U.S. company. And so it's the U.S. customs broker that enables you to do that. And in order to do that, legally, he'll want you to sign a power of attorney. So when you start doing business in the US and you deal with a customs broker, don't be surprised. He or she will ask you to sign a power of attorney. And that's the legal requirement in the US. It's actually the same in Canada as well. And so there's a format to be followed. It's called the CBP 5291. CBP, I forgot to mention, CBP stands for Customs and Border Protection, right? That's the name of the US Customs Authorities Department. And so when we become the importer of record in the US, then the US Customs broker is going to perform the customs clearance, fill out the import declaration, the import customs declaration on our behalf. And so that form looks like this. It's called the CBP 7501. And so I sent it also because, and you should have it, it's basically to tell you that when you become the importer of record, then the U.S. Customs broker will fill this out for you, and you should insist on getting a copy of it so that you can be sure that it's done properly, because this will be done in your name. You'll be the importer of record in the U.S. So we have to be conscious of that, and that's why it's important for to get a copy of it. And so Lydia has a question here. Audrey has a question, but has not typed it yet. So Lydia mentions these forms, value less than 2,000. No, I mean, the $2,000 is the limit. Sorry, it's for Canadian export declarations. So when you ship goods to the U.S., there's always a customs declaration has to be done in every case, and the value limit actually is $2,500, and then if it's below $2,500, it's a different form, but the process is still the same. A customs broker still has to do an import clearance for you. I'm sorry if it was confusing. At the very beginning, I mentioned a $2,000 value that had to do with Canadian documentation. Sorry if I made that confusing. And so Audrey had raised her hand. Audrey, if you would like to type your question in the chat box, that would be great. And Lydia, if you have any questions, don't hesitate. So why did I send that to you is because in many cases, when we export to the US, we become the importer of record. We are a non-resident importer in the US. So the US customs broker that we appoint is going to do the customs formality in the US. He's going to fill this out for us. But ultimately, we are responsible. We, as the Canadian exporter, are responsible for it. And that's why I think it's very useful to become familiar with it, and also to always ask to your broker to send you a copy of it for your record. And so if you look at it, you can see that it's a little bit technical. It basically asks about all the information about the goods, where they come from, where they're going to. And so the main, I mean, there's lots of detailed information to be careful about, but what I wanted to share with you is that the most important elements really here are in slot 29, that's the HS code. Remember these HS code, that's this international numbering system for products that customs use. And so when a customs broker handles a shipment, clears a shipment for you and get a copy of the 7501 to have it for your records, and also to make sure that he did it properly as far as the HS code is concerned and as far as the value is concerned. I mean, these are really the main components of the import customs declaration. And Audrey, no worry, no worries. If you have no questions, that's fine, and no worries. And so Lydia is mentioning that if you ship good packages to the US, yeah, FedEx fills these forms. Okay, good. Yes, that's right. Yeah, that's the FedEx then acts as your customs broker and will fill out these forms on your behalf. So what you should do as a good practice is make sure that they send you a copy of it after it's done so that you can verify that, they made the proper declaration, and also so that you have copies if you ever have an audit, customs audit or accounting audit. So it's a good principle to keep them, to ask to have them. So this form, this CBP 7501, that's the classic U.S. Customs entry for goods valued over at $2,500 and less. And there's something else that the customs broker does for you. And so I'm just showing you this form for your information. There's something called, we need something called a customs bond in the US. And so don't worry about it. The broker does it for you. And that's only for shipments over $2,500. And so if you have, when you organize things with your broker, he will do your customs clearance, he'll do your export, your import filing, he will also do your customs bond. And so there's two categories of bond, just for your information. You can do a one-shot deal, a one-time bond for one specific shipment. That will only be applicable for that shipment. Or if you have regular shipments, then you can have what's called a continuous bond that will be valid for the whole year. That will have a larger amount, of course, but that will be cheaper for you in the end. So depending on how much business you're going to do, you could ask your broker to do a continuous bond for you, or compare the cost of doing a bond every time or doing a continuous bond. If your business goes really well and you have a lot of volume going into the US, then companies do their own bond, because the broker does that for you. The US Customs broker does that for you, but of course he charges you for it. There's a cost. And so if you get in a volume at some point, then it could be worth your while to do your own bond with your bank or your financial partner or insurance company. And so the value threshold in the US is $2,500. So if you have a shipment under $2,500, then there's no bond required, which is easier and cheaper. And then it's a different form. Instead of the 7501, it's the 3461. I didn't want to inundate you, to flood you with all these forms. I just sent you the main ones. If you would like more, let me know. I'll be happy to send them. We'll be happy to send that to you afterwards. So this is just for information. It's a different form based on the value of a shipment. And then there's also another process for which I don't have a slide, but I'm just thinking about it now in case you saw it. There's also specific declarations for shipments under $800 US, because for $800 US shipments, then 800 US and less and under. Then there's an expedited clearance. It's called Section 321, and then it's yet another process, another form. But the broker does that for you, of course. And so I'm almost at the end here of my presentation on the US. So two more things I wanted to share with you. If you're in food products, if you're selling any food product or any plant material, then you have to become familiar with the regulations from the FDA, the Food and Drug Administration, as well as the US Department of Agriculture. The FDA has produced a Food Safety Modernization Act a few years ago, which makes things a bit more complex for exporters. Canadian exporters or any suppliers worldwide really has to register with the FDA. There's this foreign supplier verification program that is quite demanding. You have to demonstrate that that you're well equipped for in case of product recalls. You have to have a representative in the US in case of product recalls, etc., etc. And so that is compulsory when you deal with the US for foodstuffs. Become familiar with FDA rules, or USDA in case of agricultural products, or meat, for example, and processed meat, or plant material. And so we can't go into details of that because that would take far too long and they might not interest many of you. So I just wanted to mention it as we're on the topic of the US. Become familiar with the regulations for these products in the US. It's really important, otherwise your products won't go through. And so speaking of FDA, there is something that is an additional requirement for food products, is that an exporter, a company that sells in the US, has to file what's called a prior notice to the FDA, and that has to be done before the shipment arrives at the border. So if you're exporting foodstuffs, take the time to inform yourself in details of the requirements for prior notices to the FDA. They have to be done. It's pretty easy to register and to do them, but you have to be sure that you do them in time, and you can't do them too early. You can't send them too far in advance, and you can't send them at the last minute either, because actually the FDA wants them at least 2 hours before a shipment crosses the border. So it's something to be aware of and to follow closely and make sure it's done properly. Otherwise, your goods either will be stuck at the border or you'll get penalties from the FDA. And so the prior notice is just a question of registering, and then you get a user ID, a password, and then you fill it out every time. That's just an example of a screenshot from this FDA prior notice filing. Last point I wanted to bring to your attention for the US, since we talk about forms, I wanted to touch very briefly on the types of documents, the type of customs documents that is necessary if you do temporary exports to the US. So you go into a trade show or a convention, or you're sending goods for for display. You're sending a demo that you're going to use for a demonstration, and then you're going to send it back to Canada afterwards. So that's called a temporary import. And there's two processes that can be used in the US. One is on the left-hand side, the TIB, which stands for Temporary Importation Under Bond, and the other one is the ATA carnet. So I don't want to bore you with too many technical terms, but I just want you to be familiar with the fact that when you have a temporary import, when you're sending goods to the US that will be coming back afterwards, it could also be goods that you're sending for repairs, for example. Then there's a specific customs process that has to be followed, that has to be organized with the customs broker. And so it's called the TIB, or there's also something called the ATA carnet. So you use one or the other. The ATA carnet is a bit more complex, but can be used many times. If you're going to go to several trade shows in the US within a year, then you do the ATA carnet once and then you use it all the time, whereas the TIB has to be done for every entry, for every shipment. So that's the main difference between the two. And so that completes my part about exporting to the US, and I'm trying to keep up a certain pace. I hope I'm not going too fast. I want to present as much material as possible, but I also want to answer your questions, of course. And so before we dive into overseas exporting, do you have any questions with the with documentation going to the US, particularly what I presented, the invoice, the origin certification, or the customs form? If you have other types of questions, maybe keep them to the end for just for time management purposes. And so,
Hi, Christian.
yes, go ahead, Evan.
There was one question. I'm just trying to find it for you.
Okay.
I believe it's in regards to the Pro-Forma invoice.
Okay.
And they asked, how much is the maximum amount of samples? Like what I'm thinking maybe that's
Okay.
a dollar value question. Like what's the maximum amount of samples you're allowed to send?
Yeah, okay. Well, for samples, I mean, yeah, it has to be reasonable, and the important thing I think for samples is to show also a realistic value. You know, if you're sending one box of T-shirts, it's one thing. If you're sending 20 boxes of T-shirts, it's another thing. So you have to, yeah, quantities have to be reasonable. It can't look like it's something that's going to be a commercial shipment. And so it has to be reasonable in the context of the event that you're sending that for. If you're going to a trade show that's going to be lasting for just half a day, well, you can't ship as much as if you're going to a trade show that's going to last a week. And I think the important thing on that, on samples, is also to make sure that we show a reasonable value. Customs don't like zero values. In fact, the customs computer actually will jam with a zero value. The customs computer needs at least $1. It needs a value. It always needs a value. And so that's what I can say about that, about the values. And then Audrey has a question. Are you required to fill out all these forms even if your shipping is less than 2,000? Yes, that's so, but it's not you, the exporter, who fills them out. It's the customs broker on the US side. And so it's important to be familiar with the process if you are the importer of record in the US. If you're selling to the US customer on a DDP basis or on a FOB destination basis, so then you're responsible for this import filing that the US customs broker will do for you. And the 2,000 limit is really for, we'll touch on that in a moment. The $2,000 limit applies for Canadian export declarations. And this is what we're going to touch in this part of the presentation. I have quite a few slides, so I'd like to go on if there's no further questions, and then we can always catch up at the end. So exporting overseas, what I wanted to tell you on this slide is the result of what the questions that you put in your registration, which I went through carefully, and I see quite a few of you were asking, how do I know all the documents that I'm supposed to issue for the whole world? And so several of you mentioned this as a challenge to figure out what document is needed for what country. Well, indeed, that's very much an issue. If you only export to the US, it's relatively easy to pin down what is required. It takes a bit of experience, of course, but then once you have it pinned down, it's okay. When you export overseas, well, it's a totally different story, because then requirements in China will be different than requirements in Abu Dhabi or in Finland or in Papua New Guinea. So indeed, it can be a challenge. And so that's why I built this slide to answer those questions. So the first people who can help you figure out what is needed for my export to Timbuktu or to wherever it is in the world. So the first people who can help you are your freight forwarder, your international freight forwarder. And what I mentioned here on the slide is CIFA is the Canadian Association of International Freight Forwarders. And so they have not only they have good information on their website, but also they have a list of freight forwarders. If you don't have a freight forwarders, or if you have one but you would like to know more freight forwarders, go on the CIFA website, cifa.com, and you'll have these resources available. Customs brokers also have an association, an industry association. It's called the Canadian Society of Customs Brokers. They'll likely be able to help you. Trade consultants like myself can help you, of course, right? I didn't want to miss the opportunity of telling you this. But more seriously, one very good source of information for this, to be able to get a handle on the multiple requirements that are necessary for the countries of the world, each having their own requirements, is something called the MIGRA export guide. And so it's easy to find. If you type in MIGRA's Canadian Export Guide, you'll find it very easily. However, I want to tell you that this is not free. MIGRA is a subscription-based organization. So you have to pay a subscription every month, and then you get automatic updates for the whole world. So that's something that's it may not be realistic for you if you're very small and if you're just beginning, but if you have a certain volume at some point, it might be worth your while to subscribe to that. And then, of course, the Trade Commissioner Service of Global Affairs Canada can also help in many cases. And so I invite you to reach out to them when you start looking at a new export market. So very briefly, because time is ticking. Time goes fast, especially when you're having fun like we are today, right? So I'll try to go through this very quickly because there's a lot of things I want to share, a lot of things with you, and so all I want to do here is make you aware of these requirements. They don't necessarily apply to you, but I want you to be aware of them because as an exporter, it's our responsibility when we export goods overseas, and we have to know that there's export regulations and there might be export permits. Of course, they apply mainly to arms and things like this, but they could also apply to technology. They also apply to high tech and different sorts of products. So I want to invite you and let you know that as an exporter, it's your responsibility to make sure that you comply with export controls, with Canadian export regulations, and it's very easy to go and look that information up on the Global Affairs website, export controls, and you'll see a list of products that for which there are export controls, and you'll also see a list of countries for which you need to have to apply for an export permit. So again, I don't want to say that to show you that to scare you or to make it too complicated for you. I just want you to be aware of that. It's part of your responsibility if you are an exporter to comply with export permit regulations. So they're very specific. They're not very broad at all. And in most cases, they won't apply to you, but you should look into it. You should just make sure that they don't apply to you. There's something called Guide to Canada's Export Control. It's relatively new, so you can find that easily on Global Affairs. It was updated in December last year. And if you need an export permit, then to apply for an export permit, you do that online, and that's what it looks like. I have a question here concerning the places where we get information, so I'm going to try to answer it as we go along. From 2437014584. I'm not sure who this is, but so you want to verify that the trade commissioner or trade consultants like me are the ones that you can reach out to and ask for all requirements to export items overseas. Yes, indeed, yes. That would be a source of information. Your freight forwarder should be able to help you. The Migra can also help you, but that's a subscription-based organization. And then you can also reach out to indeed to the trade commissioner overseas. That's part of what they do. And so thank you, Huri. Yes. So indeed, you can reach out to these resources. And so to go back to export controls, if you find out that your product needs an export permit, then it's very easy to apply. You apply online. There's fees for that, but they're not huge. And so, as I said, in most cases, they won't apply to you, but I want you to be aware of the fact that they exist. And then, so following export permits, which only apply to very specific cases, then we have requirements to file export declarations in Canada. And this is where, for Audrey, this is where the $2,000 value comes in. When you export goods overseas, if they're worth more than $2,000, you have to file an export declaration. And that is the document that was sent out, or one of the documents that was sent out to you, export declaration form B13A. And so if you want to take a peek at it, so that you can let me know if you have questions about it. I'm going to break it down into several parts to show you what the information should look like, or what information has to be filled out. So that's the Canadian Export Declaration. It's called the B13. Now, it's now all done electronically. And so if you want to know the actual rules for issuance of export declarations, you can look up on the CBSA website, look for memorandum D20-1-1 exporter reporting. And if you want to start exporting, then you're going to have to get ready to file export declarations through the CERS portal, the Canadian Export Reporting System. And so I invite you to get registered, look into it and get registered. There's an application form. It's pretty straightforward. Then you receive a password, you receive an ID, and after testing the system, then you're good to have your own, to be able to file your export declarations. Now, freight forwarders also file these export declarations on behalf of customers. Many customers don't do this themselves. They get a freight forwarder to do that for them. But yet other companies prefer to do it themselves because it's relatively easy to do it yourself because it's all online. And so I wanted to break down, just for your information, to break down this form. When you do it online, of course, it doesn't look exactly like this, but just want to make you familiar with the content of the information that we have to um, fill out and mention. So you'll have to you identify yourself, of course. You identify the exporter, then the importer, and the country of destination. This is where you'll show also. This will be linked to your exporter number, your business number that will have the letters RM. It's a 9-digit number, and then followed by RM, and then followed by 4 digits. So that's your exporter number. You will always have to show that, of course. And then there'll be slots where you identify the shipment mode. You identify the vessel or the airline, the container number if you're sending goods by container, the port of loading, the place of exit, etc., etc. So that's the second part at the top, which I'm sure you can identify. You can see with the form that I sent you, and then the body of the export declaration is where you're going to enter the shipment details as far as the origin, the description, the HS code, quantities and values. And then you'll identify the freight forwarder. If the freight forwarder does that on your behalf, he or she will identify himself or herself, and then identification of the exporter who fills out the form, or of the company who fills out the form. And of course, it doesn't exactly look like this anymore because it's all online, but that's the only way to sort of visualize them other than doing them online. So that's the requirement for export declarations, and we have to file an export declaration when we export anywhere in the world except in the US. In the US, we don't need to do that at all. And so the value threshold is $2,000. If you're exporting under $2,000, you don't have to file a B13 export declaration. I want to fill you in on certificates of origin, which I sent you a sample as well. So there's two cases of two types of certificates of origin. There's a certificate of origin that refers to a specific free trade agreement. And then there's a certificate of origin that is what I call a generic. So we'll touch on the free trade agreements in a moment. But I want to fill you in on what I call the generic certificate of origin, is because the situations where some countries will ask for a certificate of origin, a separate document, even though the origin might be mentioned on the invoice, that country will still want or that country's customs will still want a certificate of origin. So that could be the case in India, in China, in Saudi Arabia, etc., etc. And there's no specific form to use. You can use a generic form. What I sent you was just an example. And there, basically, on the left-hand side, you will have the document certified by a Chamber of Commerce, and then on the right-hand side, in my example here, but it could also be the other way around, you'll issue and sign the document, and then usually you get it certified by a Chamber of Commerce afterwards. And so for some countries, you need to supply such a document, and these are countries with which we don't have a free trade agreement. If we have a free trade agreement with a country, then it's a different certificate of origin that we need to issue. And so we said this document has to be certified by a Chamber of Commerce or a Commissar of Oath, and then some Chambers of Commerce offer a digital certification service. So that's good to know. You don't necessarily always have to get the actual paper stamped by a Chamber of Commerce. You can do it digitally, which is great. And so now I want to touch briefly on certificates of origin for free trade agreements. So we touched on CUSMA, on the North America Free Trade Agreement that we have with the US and Mexico. We have free trade agreements with a number of countries. Here they are on the screen here. You see Israel, Chile, Costa Rica, etc. The last two, which I put in bold, are big ones. All the others are small countries, but the last two are huge free trade agreements. The first one is a CETA agreement with the European Union that links us to 27 countries in Europe. And then we have the Trans-Pacific Partnership, which includes 11 countries in Asia, including Japan, Singapore, Vietnam, etc. And so what we have to realize, of course, is that when we export goods to these countries, then our goods will be more competitive because they won't pay duties. They'll be tariff-free. They'll be duty-free. But in order to get that status, then we'll have to produce a certificate of origin. And each of these free trade agreements has a specific form. You see, they all look the same, but they vary a little bit in the details. And so the one I sent you, just for your information, was the Korea Free Trade Agreement Certificate of Origin. I mean, I couldn't send you the form for all our agreements because it would be too much, too big a file. But I sent you the one for Korea for your information, so you can compare it with the Kuzma one, and you can compare it with the generic one. So every free trade agreement requires a specific document. Korea is this one. Panama is another one. It looks the same, but it's not exactly the same. Every trade agreement has one. However, there's something that's a little bit different when it comes to some of our free trade agreement. Instead of having a specific form to fill out, then we have to provide an origin certification, usually on our commercial invoice, a bit like with the US in a way. And so I want to show you what they look like. For Europe, for example, you see it's just 2 or 3 lines that we have to show on our commercial invoice in order to get the benefit of the CETA free trade agreement. And for the Trans-Pacific Partnership, it's a little longer, and but it's still relatively okay. And so for some free trade agreements, there's a specific form to be filled out, and for some others, there's no actual form. There's just information that's required, and then that can be on the commercial invoice. Very briefly, I wanted to mention other documentation that's required sometimes when we export overseas, but it's really just for information. I don't want to spend too much time on this because I see we're going to run out of time soon. I would like to have the opportunity to exchange with you a bit more, but very briefly here, sometimes a client overseas will ask you for an inspection certificate. So that's a bit tricky, a bit specific, but some countries require it actually, and so that has to be done ahead of time. So if you find out that the customer wants that, or the country that you're selling to will ask for that, then of course you have to do that ahead of time. You have to be proactive and get the goods inspected before they're shipped out. Goods that are sold by weight, then sometimes you'll be asked to supply a weight certificate that will confirm that these 18 tons or 50 tons that you're selling actually weigh 50 tons or whatever it is. So a weight certificate is required sometimes. If we're in food, then of course we often will have to supply a sanitary certificate, which will be issued most of the time by the CFIA, the Canadian Food Inspection Agency. If you're sending plant products, wood products, then a phyto certificate will be required. It's also the CFIA that issues that. So you have to make these arrangements ahead of time, of course, make an appointment with CFIA, have an inspector come and inspect the product and then issue the certificate. And then the customer overseas will need that to get the goods through customs at destination. And in some cases, you could be asked to supply a certificate of free sale. I see one of you has mentioned it in the comments. So it often applies to pharmaceuticals and vitamins and things like this. And what it is if you sell a product that has not been tested and accepted overseas, in some cases, the overseas authorities will accept a document that confirms that the product is for sale in Canada, is accepted, is approved in Canada. So that's what a certificate of free sale involves, but it's very specific to certain products, certain commodities. As I said, I just wanted to mention that in passing, just to make you aware of these different requirements that might come up depending on the product that you're exporting and also the country where you're exporting to. And then briefly to end, so that we can have some time together, I wanted to share with you just a couple of small elements on shipping documentation, because we have mentioned that as content we would cover in today's session. So the main shipping document that is used if you're sending goods by ocean freight to Asia or Europe or Latin America or whatnot, then it's called an original ocean bill of lading. And what's interesting about an original ocean bill of lading is that once it has been issued, signed, and given to you as the exporter, you can make sure that you're sure that the buyer overseas, the importer overseas, won't be able to get the goods until he or she presents an original bill of lading at destination. So that's why it's called a negotiable document. It enables you to make sure you get paid before releasing the document to the importer. And that's why we call it a negotiable document. It's often used for letters of credit or for cash against documents transactions where the documentation goes to the bank. And so that's the main ocean freight document that we use. And then the alternative to that is called a seaway bill. And there the goods are released automatically to the buyer at destination. There's no way to hold on to the shipment until you get paid. The goods are released automatically. If we send goods by air, it's also a non-negotiable document in a sense that the goods will be released to the buyer automatically by the airline. So that was just to fill you in a little bit on the type of shipping documents that you'll come across if you export goods that are being shipped overseas by air or by ocean, by boat. For your information, time is limited, so we can't really go into too many details on these. And then very briefly, when you start exporting overseas, you have to know that there's international rules that apply for the packaging, for wood packaging. And why they are important is because if your goods, if you use wood packaging material, wooden crates, pallets, 2x4s, etc., then you have to be sure they have been heat treated. They have been treated in Canada, and you'll have to have a little mark like we have in the center of the slide here. And the reason why sometimes Canadian exporters are not aware of this is because we have an exemption with the US. You see, when you export to the US, we don't need, if we use wood packaging material, we don't need to use treated wood. We can use just plain wood, untreated wood, as long as it's Canadian or US. So because of that, many companies that only export to the US are not aware of these rules, and then they start wanting to export to Asia or to Latin America or the Middle East and whatnot, and then they're not aware of these regulations. So we have to make sure that whenever we export overseas, we always use treated wood as wood packaging material. Otherwise, our goods won't go through the board, won't be clear, won't get through customs at destination. It's the same if we import goods from overseas in Canada. We also apply these wood packaging regulations. And then for some countries, and that's my last slide, for some countries, what's amusing is that not only you have to use treated wood, but on top of it, you have to supply a certificate, an extra document to say that you have used treated wood and that the wood was clean, etc., etc. And so that's the case for Australia and New Zealand. And that's actually brings me to my last slide. Yes. So I'm sorry I had to speed up a little bit at the end so that we're still within the time that was allotted to us, and I also wanted to have time to answer your questions, should you have any. So I hope this was interesting, informative. I know we didn't give you too much time to look at these documents because we only sent them to you this morning, but I hope you've been able to have a look at them maybe while I was speaking, and that you will have them. You will have them for reference anyway. And so I hope all this has been interesting and useful, and that it will help you export more, grow your export business, and make the right shipping arrangements so that your goods arrive safely without delays and economically as well. So I'll be happy to answer any questions and to exchange with you. I see here before Evan comes back, I see that we had a question from someone. How many times can I ship less than $2,000 in a week, month, year? I believe it's a daily allowance. It's a daily limit, but that's providing it's providing you're not splitting the it's a daily shipping per customer, shall we say. If you get one order from a customer and you split it in 2 or 3 and just to get under that, then that's not acceptable. So I hope that answers your question. And I'll pass the microphone back to Evan.
All right. Well, thank you so much, Christian.
You're welcome.
Certainly a lot of documents to be aware of, but I mean, there are folks out there that can absolutely help with this too.
Absolutely.
Just going to share my screen, a couple more slides here.
Yep.
Just before we hop onto that Q&A, just want to point out another webinar that Christian and I are doing. Sorry, I actually have a date change here. It's actually Tuesday, November 9th on globalization and risk. So we'll be doing a deep dive into the topic of globalization and risk management. So we will explore risk management tools to help make you successful, such as credit and cargo insurance, international payment tools, and carrier limits of liability. So you'll be able to find this on Eventbrite or in any emails that I may have sent out to you. And we will get into questions. So again, please use that chat box feature if you have any questions. I did see a couple of them from the Eventbrite registration form, so we'll get started with those ones, I guess, Christian. Okay, first question. Do you need to apply for permits in each state when you are exporting your product there? Or is that what your importer distributor takes care of? I'm assuming
Yes, that's what yeah, your distributor would do that. You don't have to register. The FDA registration is a federal one. So you must be talking about foodstuffs, right? So you have to be, as a foreign supplier, you have to be registered with the FDA as a foreign supplier under the Foreign Supplier Verification Program, and then that's done once, filing with the Food and Drug Administration. That's the federal authority for management of food safety in the US.
Okay. I think we touched on this question multiple times during the webinar, but I think it's important to drive home. So is there a list of requirements and thresholds for documents? For example, over $2,000 value exports require additional paperwork.
Yeah, so is there a list? Well, that's kind of a little bit hard to find, but because all this information is in bits and pieces in different spots. I mean, if you're looking at Canadian export regulations, then you see we already have two sources of information. You're going to the CBSA website to see what are the export reporting requirements, and that's where you'll see the $2,000 limit explained exactly how it works. And then if you want to verify if you need export permits, so do you need a permit? You need a license to export your products. That you have to look up on Global Affairs. So that's kind of part of the dilemma, or part of the complexity of exporting, is that even in Canada, you have to go through different sources to get all the information that's required. So of course, when you're talking about overseas countries, then there's general rules. There's the general. Some of the rules we'll talk about on November 9, the international legal requirements, or international Incoterms, for example. But then each country may have specific requirements, and that is not really easy it's kind of part of the challenge. And so this is where your international freight forwarder will help you, will guide you through that. And this is where, if you want to subscribe to the MIGRA export guide, they would be covering that. Or you may have to go case by case. You see, when you enter a new market, let's say you're successfully selling in the US and you want to start selling in Japan, you may have to do some homework, including getting a hold of the Trade Commissioner Service in Japan, so that they can help you become familiar with the rules of importing products in Japan. Unfortunately, there isn't one single place where you can find all that information. You really have to dig into it case by case and build it up as you go along, and work with good partners, including with the government of Alberta, who can help you, because Alberta has offices overseas, and they may be able to help you as well to go to decipher and to find out what the requirements are for each of the markets that you want to get into.
Yes, thanks, Christian. Thanks for the plug on our international offices as well.
My
Do you
pleasure.
have any questions in your chat box that were sent directly to you, Christian?
Let me take a look. I don't see any. No. I don't see any other. No, I had no private message. Let me see. Someone mentions. Okay, that the Edmonton Chamber of Commerce requires a notary of public signature plus the chamber. Yes. Yes, so that's a good point. Marvin is making a point here that to get a certificate of origin certified by the Edmonton Chamber of Commerce, they want a notary public to sign it. So yes, it's something I forgot to mention. You see, in some cases, like in theory, when you need to produce a certificate of origin, you produce it yourself, and there's no specific form. I sent a generic form that can be used, but it's really, the format is free. So the principle is that you, as the exporter, you certify the origin. So you fill it out, date it, sign it, and then the standard process is to have it co-signed by a chamber of commerce. And then sometimes the chamber of commerce will sign it right away, will not make any issue of it. And sometimes the chamber of commerce will say, I need it co-signed first by a commissar of oath or by a notary. That happens. It's unfortunate, but that happens. And so sometimes that's just how it is. It really depends. And so you may be stuck with having to go to a commissar of oath or a notary and have him or her sign the co-sign the certificate of origin, and then the Chamber of Commerce will sign it, will co-sign it for you. That happens sometimes. Just like in some countries, for example, in Egypt, on top of all that, you also have to go to the Egyptian consulate to get the document signed. So it's sometimes a bit tedious, but it's unfortunately it's unavoidable depending on where you're shipping to. And so Courtney is asking, do you have to use your local? As far as I know, yes, you could use your local chamber of commerce. Like, it's not that you have to use your local chamber of commerce. You can use any chamber of commerce, but usually a chamber of commerce, the only chambers of commerce that will certify your documents are the chambers of commerce that know you. And so that's why, yes, the principle would be it's our local chamber of commerce that will co-sign them. But in theory, you could go to any chamber of commerce because they're official recognized bodies. But in practice, only a local chamber of commerce might accept to certify the documents. I hope that answers your question, Courtney. I see we have a few coming in, so I took the liberty, Evan,
Yes,
of
thank you.
picking them up as we go along. And so don't hesitate. We still have a few minutes. We're almost at the end of the time that was allotted, but don't worry. I'm in no rush, and we'll be happy to answer any questions you have. Do not hesitate at all. If anything that was presented was not clear, if you have questions on the forms that we sent out, the forms that we looked at, or other questions that come to mind on your exporting efforts, and if you want to verify something or clarify something, please don't hesitate. We'll be happy to answer. And if we can't answer, we can look into it and get back to you separately. I also would like to remind you, if during the presentation there were some pieces of information where you would like to have, let's say, I may have mentioned some forms that were not sent to you already, then please mention it in the chat. I don't remember which one I mentioned, but I had not sent. Would be happy to send you links to actual forms or links to some of the things that we have talked about, but that we had not sent previously.
And I just want to remind everyone that this is recorded, so I will be sending you guys the link to the YouTube playlist tomorrow, hopefully.
All right.
But it looks like we've hit that 2:30 mark, so I
Okay.
won't keep you guys any longer. Thank you all once again for taking the time to join us today, and thank you, Christian, for sharing your knowledge.
You're welcome.
I hope everyone found value in attending, and by all means, join us in November for our next webinar. But enjoy the rest of your day and take care, everyone.
Absolutely.
Goodbye for now.
Thank you, Evan. Thank you, everyone. All the best. Good luck, everyone. Bye for now.